Just the other day, I bought my first 100 shares of Google at $97 a share. And I remember saying to myself, wow, I cannot believe I bought Google at under $100. And today, it trades at 88. I bought my second 100 shares. I have now doubled my position. I bought another 100 shares at 83, and so I now have an average cost basis of 90. And the fact that I'm able to buy hundreds of shares of Google at $90 a share is mind-boggling to me. 5 years ago, the stock was 50 bucks. It raced up higher and higher until the peak at around late 2021 and around November, right around a year ago. Actually, that's kind of funny. Right around a year ago during this time, we had an all-time high right at 150 bucks. I bought my shares today at 90. We're going to talk about all things Google, why I think that this company is fantastic, why I think it's a great grower, a long-term opportunity, and really, if you look at my long-term spreadsheet here, this is my notes and my numbers that I have for Google. There's so many awesome metrics to look at, but really, there's only one way you can assume that this company is not a good investment, and that is if you assume no revenue growth. This isn't an estimate right here. This assumes a price target, a 2026 Google price target of $140. Now keep in mind, that would mean that over the next 4 years, Google would go up about 50% in value, which is pretty reasonable if you ask me. A 50% return over 4 years, that's nothing crazy, that's not out of the realm of possibility. And even with those reasonable assumptions, you can see it would give you these estimates based on the numbers that you see right here. A 4% revenue growth, 24.7 price of free cash flow. 5%, 21.5 price of free cash flow. 6%, 18.9, which is pretty low if you ask me. This is a company that can generate lots of cash, has continued to grow despite the economic recession in the most recent quarter, growing 6.1%. I want to talk in this video why I think that will continue, why I think that this company will grow. If you think one thing will happen, that Google will not grow, then turn off the video now, assume that everything I'm about to say is wrong, because we're going to talk about in this video why I think YouTube and Google and its cloud infrastructure and all of its other little businesses that combine into the big search engine we know today will continue to grow despite where we move in the future. High interest rates, low interest rates, economic boom, economic bust. We're going to talk about all things Google and why I think it's set up wonderfully for the future. So thank you guys for tuning in. If you want to see more about me, if you're not familiar with my channel, I have my investment portfolio listed here, sitting at $34,500. My performance since starting this brokerage. We also have my balance since starting YouTube, which is listed right here. Let me zoom out a little bit so you guys can all see it. But we also have my holdings, my performance, my monthly YouTube income, my long-term lifetime YouTube income, and then my portfolio, which is shared down below in the description, which if you want to check out that, as well as other opportunities like mentoring calls, $10 for getting signed up for M1 Finance, that's down below in the description. Thank you guys for tuning in, and without further ado, let's go ahead and dive into Google stock. This is a company, if you look at its long-term compounding, over the last 10 years, it's compounded growth at 21%. The billions of dollars in revenue just keep compounding, reaching $257 billion last year, and we're on track to outpace that this year. Like I said, the most recent quarter we grew 6%, and the free cash flow, despite compressing margin, despite advertisers not willing to pay as much, the profitability has shrunk some, but in my opinion, I think it's safe to say that it's mostly holding up steady. We've started to see a little bit of a downturn, but it hasn't been a massive crash like many companies we've seen in terms of its profitability. And obviously, as we all know, the share of digital ads for Google is just absolutely insane. This is not search, this is just advertisements. And it is crazy to see how different Google compares to its competitors. Even looking at Facebook, the closest competitor, it's not even close. It makes up almost half of all advertisements in the digital ad market as of the time that this little chart was made. If you look at the actual search engine, the amount that people actually go into a search engine and type in something, they're actually searching a product or a service or a topic or whatever, you can see that over 91.5% of all searches obviously come from Google. I think we all know this. Furthermore, I think the only competitor that could really compete with Google's growing ad business is really Amazon. Amazon has been the one that has stood out, but I will say that it's a different type of business, a different type of search. I think that Google will still maintain a lot of its profitability despite Amazon growing. Those of you that don't know, like I showed earlier, if you go to my holdings, Amazon is one of my biggest holdings. It's second place right in front of Google, and I think that Amazon will continue to be a beast. That said, I don't think that it will disrupt Google's market share. It's a different type of advertising, it's a different type of business, and I think both will be successful. Furthermore, obviously, as we know, Google has its revenue split into different products. It's not just Google search. Now, to be fair, a lot of the revenue, and especially a lot of the profitability, comes from Google search and its advertising business, but it does have other bets as well, including Google Cloud, YouTube, and other smaller bets as well. We're going to talk about here in that video. Now, you can see this is a rough breakdown as of the time that this was made. It's a little outdated, but it's still pretty close. You can see that it's Google search business, it's Google network, it's YouTube, it's Google Play, it's Google Cloud, and other revenue split is shown in the pie chart right here, just so you see that it's not all Google search. And I think many of these other smaller categories are going to be big growers and big profitability opportunities in the future. One of these being YouTube. Right now, as you're watching, you're obviously watching YouTube, and I make part of my side income off of my regular day job at Paycom as a YouTube creator. And I think obviously as YouTube has more creators on the platform and those creators make more videos like myself, you're incentivized to work harder and harder and bring in more and more eyeballs to grow your channel, and this obviously brings an opportunity for YouTube. This I think is going to be a big growing opportunity because I think it's almost like owning a little mini Netflix. I'm not saying YouTube is going to be as good as Netflix, but I'm just saying it's like owning a mini share of Netflix inside of Google that comes along with your investments. And then the fastest growing market share of all is of course the cloud infrastructure. You can see the revenue market share over time, and this is as of the most recent quarter, Google owned 11%. Now this is where I gotta be honest here. The number one here, which once again, as I said, I am an Amazon shareholder. Keep that in mind, so I am biased going into this. I think Amazon will dominate the cloud infrastructure market. I don't think it's even going to be close. The only competitor that will come close, in my opinion, is maybe Microsoft with Azure, but honestly, Google Cloud is the only other competitor really in the space, and I do think that they will get beat out by Amazon and Microsoft. That said, the margins have been improving. I can prove that to you. If we go over to Google here, let's go ahead and zoom back in because these charts are a little bit small, so it looks better when we zoom in. If we go to the margins for Google Cloud, let's go to this section right here. You see the quarterly free cash flow margin, or excuse me, the operating margin, and it's split into three categories: the whole business, the operating profit for the service category, and then the operating profit for the cloud category. You can see when this was started being disclosed in 2020, you can see that they were producing negative margins of 62%, negative 47%, negative 35, 32, 24. This company in 2020 produced alone an average of negative 44% margins. 44% margins in the negative are absolutely awful. That is so bad. In 2021, it did improve. Their 2021 margins ran at negative 16%. That's a big improvement, but that's still not anywhere where we need to be. Negative 16%, it's eh. That's what it is, it's eh. And you can see that so far in 2022, it has improved. It's already down to negative 13%. And in the most recent quarter, it's only negative 10. Now, that's still a long way to go. This company is still losing money. This section of the company, I should say, is still losing money at negative 10%, but it definitely is improving. You can see 2 years ago, we were producing negative 62 margins. Now we're negative 10. So I think we'll eventually see a flip. This company will eventually flip its profitability on its cloud business, and I think that will be a long-term grower. Furthermore, the revenue growth has been ridiculous. When they started disclosing this, comparing back in 2020, in 2021, this is the numbers that we have, as well as 2022. Generally speaking, it's been growing anywhere from 37 to 54% year over year. Quarter 1 2021, it grew 46%, then 54, then 45, 45 again, 44, 36, and in the most recent quarter, we grew 37%. Just in the last year, we grew billions of dollars. A year ago, we were doing 4.99 billion. Now we're doing 6.88, and this is compounding at a rapid level. In 2021, it grew at an average pace of 48%. So far in 2022, Google Cloud has been growing at an average pace of 39%. And even some of the big categories, some of the sections that aren't supposed to be growing as much is still growing. The search business so far in 2022 has grown 14% on average throughout the first 3 quarters, and even YouTube has grown 6%. So the businesses are slowing down, but I think overall the opportunities moving forward are still going to grow. The big part of the business that is not growing fast is obviously the search business, but it's still growing slowly. The most recent quarter was 3%. Which wasn't fantastic, and YouTube finally hit a negative number off its tough comparables, but I think next quarter will likely be a lot better. Google Cloud is obviously powering a lot of this growth, and I think the main main point for shareholders here is the opportunity to assume any level of revenue growth. If you run any long-term projections, if you run any type of discounted cash flow models, if you assume any growth that is even remotely reasonable for Google, then I think you can see that this is an awesome opportunity at today's share price below $90. I think what did we look at earlier? I think it said 88. Today's share price closed at 88.65. Yeah, that's right. That is just absolutely ridiculous. And I bought my average shares at 90, so I'm a tiny bit down. These are my long-term projections going throughout 2022 to 2026, and this is how I think they're going to get there. Furthermore, this company is buying back shares like it never has before. Because if you look at this, if you look at the most recent quarter, you can see that they bought back 2.2% of the company back over the last year. And since they flipped the script back in 2019, this company went from 13.9 billion shares outstanding, decreasing it quarter over quarter, and now they're looking at 13, almost breaking below to 12 billion shares outstanding. The reason why they're able to buy back so many shares is because if you look at this insane cash pile, look at this. Even despite it going down this year, we still have $116 billion in the checking account ready to go. Look at the debt piles. If you look at the debt piles, it's a whopping $10 billion, but when you compare that to the cash piles, look at these side by side. The green number is the cash, as you can see, and that little bitty red bar, if you can even see it, way down there is the debt. So when you compare them side by side, it's just ridiculous. This company has a net cash position of over $100 billion. So today, the company trading at a $1 trillion market cap, I think is just laughable in my opinion. The company is still growing, well into the single mid digits. It's growing 6% as of the most recent quarter, and I think we have reasonable opportunities to grow 10% plus after we get out of this recession, and then the free cash flow is still holding steady, still producing tens of billions a quarter. And I think this year is not going to hit as high as last year's 67 billion, but I still think there's lots of opportunity with this company trading at $90 a share. So it's one you'll see me own throughout 2022. You'll likely see me own it throughout all of 2023. There's even a good chance, depending on where the share price goes, you may even see me own it all of 2024. So stay tuned. If it's a company you hate, don't stay here because you're going to see more videos of Google as well as lots of other these companies included in the pie. Some of these companies have done better than others. Google is one that struggled, but it's one that I think will do great for the reasons I just mentioned above. Thank you guys so much for watching. I appreciate you watching all the way to the end. Check out all the stuff down below in the description if you haven't already. Without further ado, my name is Jordan. I'm Millennial Investor, and I'll catch you guys next time.